very warm welcome to you. Meltem, Paul, Simon, Michael, many thanks for being here. It's a real pleasure to have you here on Binance's special day. On today's panel, we're going to be talking about intelligent investing and whether crypto is right for you. So before we kick off, I think it was earlier this year, it was February this year, that Warren Buffett said cryptocurrencies are like a mirage. And I think we probably, to a certain extent, maybe a healthy extent, disagree with the sage of Omaha on these sentiments. But Meltem, maybe if I can start with you. You've been investing in this space since your DCG days through to what you're up to now at CoinShares. How have you seen the investment space evolve over these years? It's a really broad question, but feel free to take it whichever way you'd like.
Sure. Maybe I'll just start by sort of laying out the investment landscape. So when I started investing in 2015, there were about 4 firms who were dedicated to investing in the space. So I met Paul at Pantera. Obviously, he and the Pantera team were there. Hey, Paul. That's a good looking mustache, by the way.
I know.
That's a proper lockdown mustache. Kudos.
That's good.
Thank you.
Sorry, I have to have a little bit of humor. I like to have fun. But there was Pantera, there was Digital Currency Group, Blockchain Capital, and then there were some Silicon Valley larger venture firms who'd invested, and some angels, but it was still a fairly small space. And really the way that people were allocating capital was through a venture strategy. And then some people were buying Bitcoin individually. And there was really only a handful of investment products, the CoinShares XBT provider product in the European market, and then the Grayscale product in the US. So that was really it in terms of getting exposure to crypto. Now, 5 years later, what's been so fun, being part of this industry and really helping it grow and evolve, there's a lot of different ways that people can invest in the industry, from structured passive beta products all the way through to actively managed funds. There's now debt-focused instruments, particularly in the asset-backed lending space, being pioneered by companies like BlockFi and Celsius and Nexo. But effectively, what we have is, 3 ways of investing. You can invest in equity, whether that's early stage all the way through late stage and public companies. There are now a number of listed companies that are crypto and blockchain focused companies.
I wish.
You can invest in debt. And debt is a category that's expanding and starting to get more formalized through both offerings where investors can lend directly, structured credit funds, and other sort of debt instruments. And I think the warrant space is also starting to heat up, which is exciting. And then the last category, and one that we're still, I think, working to kind of define, is the category of investing in digital assets directly and also investing in tokens. We're actually working on a research report right now about where token investing fits in sort of the balance sheet structure and in terms of allocation strategies. But I think all 3 of those areas have seen specialist firms sort of enter the space. And I know Michael and Paul both invest in tokens as well as equity. So maybe that's a good point to sort of pass it to them to talk a bit more about that evolution.
Yeah, absolutely. No, that's fascinating. And so, Paul, I mean, Pantera have been doing this since 2013. You've been investing at all levels of the industry since 2013, 2014. And of course, you've raised a number of venture funds successfully since then. Have you seen a bit of shift in appetite from the institutional space throughout these years? And if so, kind of where is the current temperature in that respect at the moment?
Thank you very much. I'm really excited to be here and really excited to see a lot of familiar faces. You're right, Pantera has been investing in cryptocurrencies and blockchain since 2013. The firm was started by Dan Moorhead, who has a very institutional background coming from Tiger Management as CFO and head of global macro trading. And so he's managed billions of dollars for over 2 decades. And we've evolved just exactly how the space has sort of evolved too. We're like a startup company. I mean, we're trying to throw investment products out there to sort of match what investors are demanding. And so in 2013, people were interested in buying Bitcoin. Pantera launched a Pantera Bitcoin fund, and that fund is performed pretty well, 16,000% returns. And then in 2014, that's when I joined Pantera to help with early stage investing. And we launched a VC fund in 2013, but then also our VC fund for sort of non-internal capital in 2014, and that was mostly raising from family offices, high net worth individuals, and some strategic investors. Moving over to 2017, we were the first ones to launch an ICO only fund. So think of it as investing into early stage projects, but getting a future distribution of tokens later on. A SAF was the first iteration of it. Now there's token purchase agreements, et cetera. And, that fund, was sort of the first of its kind and continues to go right now. And then later in 2017, we launched the Digital Asset Fund, which is sort of a later stage token fund. So imagine active buying and selling, long short of cryptocurrencies that are already on the secondary markets. And those two funds were still primarily family offices and strategic investors, other VC funds, corporations. But, we are starting to see, especially, I'd say early this year, a lot of institutional investors are getting more and more interested in. Of course, the pandemic sort of, spurred a little bit more incentive to really think about how to allocate into different types of asset classes. And what we're seeing is not only are they interested in venture, which makes a lot of sense because a lot of them have an allocation toward venture capital, but a lot of them are actually interested in tokens too. They're really starting to get educated. And I think because of, other funds like, CoinShares and, Mike's fund, you're hearing it from a lot of different sides, and they're really understanding that tokens and equity are just investing into companies, and it's just a different way of accruing value. And so they actually want both equity and tokens now. I'm seeing actually people wanting both sides of it, and they're actually thinking, well, we want to allocate to investors that can just decide for us whether we should be investing into a company using equity or using tokens. So we're seeing quite a bit of interest from endowments right now. We have a fairly large endowment already in Pantera, and I think a lot of them are really saying within the next 6 to 9 months, we really do want a percentage of our wealth into cryptocurrencies, and we're looking for fund managers that can provide us that exposure. For them, it's not really, hey, we want to find the fund manager that's going to produce the largest returns. It's really who's going to be a good steward of our capital, who is going to check the boxes in terms of having the right, vendors, having the right security practices, evaluating companies the right way, being able to sort of navigate the environment and, making sure that, we are investing into a manager that has a good reputation, things like that.
Awesome. Yeah, it really sounds like, we're really on a pathway towards maturation. And in many cases, you guys are spearheading the lead on that. Michael, from your perspective, are you seeing similar things in the investment space? Do you feel like we are slowly maturing and the appetite is maturing? And also, are there any interesting signals that you've seen during this strange economic times we're in caused by COVID, where people are actually starting to think about new asset classes and maybe crypto's a new area for them?
Well, I'm not going to give a 5-minute explanation about the history of my fund. I haven't been in this game as long as everyone else on the panel. I've only been in it since 2018, really. But I was a venture capitalist before that. And so I bring a little bit different approach to the table. I'm thinking as a venture capitalist when I look at these companies. So we like tokens first, but we invest with a venture capitalist mindset, which means we're not always looking to get the best valuation. We want to make sure we get the right co-investors. We want to see if we can do everything we can to help the company. These are lessons that have been learned in Silicon Valley over decades that I just carry with me. And we tend to co-invest with people who have similar values. So what do I think about what's going on in crypto right now? I have no freaking idea. Like, I started my fund the first week of 2018, the $100 million venture for hedge fund. It was the absolute top of the market. I mean, it was like literally we were like buying in XRP at 1,400 and Bitcoin was not 20,000, but it's above 15, I think, when we bought in. So the first year of running a hedge fund, I'm not going to pretend like I was the greatest, investment manager ever to do this. We face planted. We beat the market by 50%, and we still lost 40% of our funds. So we survived, and we did well enough that our LPs, we have a very small number of LPs. Unlike other funds, we don't go out and talk to a lot of family offices. I've learned in my career, I like smaller number of business partners. But our LPs love us, so they continue to put more money into the fund. And so we've done well because of that, because we have the right LPs. But, you know, whatever I predict right now is from a guy who started a crypto hedge fund on the absolute top of the market. So instead of predicting where things are going, I just try to find companies that are being led by really, really high quality entrepreneurs and back them, and then let them do their thing. And that's about as much of a predictive ability that I have. Very
wise. Thanks, Michael. So Simon, taking a slight change of tact, you and your team very much come from the world of traditional finance. How does crypto tend to perform as an asset class? And you know, you are very much in the trading space as opposed to kind of venture. Are there any comparisons that you draw to any traditional assets? How have you seen the market performing over the last few months?
I mean, in general, with regard to performance, there is no comparison. I mean, what we have seen in the crypto space, starting with Bitcoin, but also with other cryptos popping up in the ICO boom, that was just insane in terms of performance, but not only in absolute terms, but also in relation to its volatility. I mean, even if we have seen high volatility, the performance was outstanding enough to also in risk-adjusted returns, it was just something completely new, and it blew away a lot of minds in the past, I would say. If you look at other measures, for sure there are similarities to other asset classes. For example, what we have seen over the last couple of years, even if they have been pretty volatile, the volatility of Bitcoin and other majors have been constantly coming down. And that's a sign for a mature asset class that your volatility comes down over time. And also similar to other asset classes, crypto, starting with Bitcoin, started as a very simple product, just spot product, spot trading. And over the last couple of years, we have developed more complex products on top of that base layer, starting with futures, but also in the meantime, more complex products. So in that case, it's pretty similar and comparable to the incumbent asset classes.
Okay, very helpful. So if we were speaking to a potential investor at the moment, then how would you try and begin to sum up the investment opportunities we see in the space? And maybe that's one for you, Paul. How would you try and contextualize what the opportunity is at this stage right now?
Yeah, so, you know, in terms of the opportunities, I mean, I think the beauty of this space is that, it goes with the ethos of decentralization and the spread of economic wealth. And, you don't need to be a large fund to be investing into this space. You probably notice the rise of DeFi, and the great thing about that is you can participate with just as little as $10 or $20 and try out some of these DeFi products and be able to start lending, start borrowing, start generating some yield, play around with different smart contract products. And so I would suggest people just play around, and right now it's a little clunky using MetaMask and things like that, but you can actually participate in all the different things that a lot of the investors are doing, and do your due diligence, have fun, spend whatever money you can lose. But I think that's a great part of this ecosystem. Now, I think for LPs looking to invest into funds, I mean, a lot of people just don't want to deal with the risk of security and managing keys and just want someone to kind of do this for them. Then, the way that I would pitch it to those guys would be, the space is disrupting a whole bunch of different markets. We've seen that even Bitcoin itself has produced a fairly large return. And this is pretty asymmetrical to what we're seeing in traditional markets, that it does make sense to put, a single digit percentage of your net worth into this space. And if you find a manager that you can really trust, find the strategy that makes sense for you. You may be doing one strategy yourself. You may be investing into startups, and maybe you want someone to manage the liquid side of things, or vice versa, or maybe you want someone to manage both things. But for for those types of investors, I mean, it's really just kind of finding someone that you trust and finding the strategy that you like. But you know, a single digit percentage of your net worth is a great way to start.
Yeah, yeah, brilliant. I think a lot of people at the moment are looking for instruments that they understand and that they've perhaps invested in previously. So on that note, Meltem, CoinShares have been pretty active in the exchange traded note space, so kind of pioneering the build of these regulated instruments that are investable for both retail and professional investors alike. What have you tend to see as the typical investor profile in those kind of instruments? Oh, I think you're on mute there.
Oh, sorry.
You're back.
All right. Look, I think the reason I was drawn to building DCG and now CoinShares is, you know, building a firm that provides a variety of different avenues for different types of investors to get into the asset class is really exciting to me. What we've seen with the exchange traded notes, when it started in 2015, the ETN's core audience was primarily retail investors, some high net worth, sophisticated investors who want exposure to Bitcoin. So the idea was point, click, buy Bitcoin on your regular broker dealer platform. As a result, we ended up building a bunch of trading infrastructure on the back end that connected legacy market makers and brokerage accounts with what we were doing on the crypto side. And now what we've gotten to is sort of a full slate of products, and our investors, you know, we have large institutions who are holding our ETPs or investing in our active strategies, whether that's a venture strategy, a liquid strategy, or an offering through our broker dealer. There's sort of a wide range of investors. And really what we're trying to do is look at what the requirements of different types of investors are and build wrappers around investment themes that make those themes accessible to the people who want to be able to allocate to them. And then we publish a bunch of great research and put out content to try to make it tangible and to really make this asset class in this industry smell, look, taste, feel like things that people are already comfortable with and know. I will say the volatility in equities and across asset classes over the last 6 months have made the primary objection of Bitcoin's too volatile go out the window, because Bitcoin's volatility is right now, you know, way lower than the volatility we're seeing in other asset classes. So I will say over the last few months, a lot of folks who've historically reacted negatively to the volatility of crypto are coming back and saying, maybe this isn't a terrible idea. They're just repricing risk and rethinking volatility across their portfolio.
Yeah, it's really reframed a lot of people's kind of risk appetite, seeing what's happening in the equities markets, mimicking certain periods of the crypto space's volatility. We'll see where that goes in the next few months.
You have ZERP as well, right? So to Paul's point, you know, ZERP, zero interest rate or even negative interest rate environments, I think are making people look further afield for yield opportunities. And so I used to trade overnight rates, right? Looking at what's happened with LIBOR, SOFR, Maribor, there's going to be a lot of change coming. And I'm really excited, not just for crypto, but crypto adjacent businesses that are creating opportunities for investors, again, across equities, debt, sort of yield products, and then other types of investment strategies that are more esoteric.
Great stuff. Thank you. So Michael, maybe zooming out for a second, talking about your personal thinking on this side. What are the things in the crypto space that are getting you really excited from an investment perspective?
Well, I think Bitcoin is the alpha and the omega here. So it particularly before March, you know, everybody, at least we, looked to Bitcoin as the alpha and the prime mover of every coin and every product in this space. Everything was very correlated to Bitcoin. XRP somewhat less so, but even that very highly correlated. Then we saw how correlated everything got to the markets for obvious reasons in March, and that was a bit of a shock. Although with hindsight, it's not shocking at all. So the way we're investing right now is more than ever, we're looking at the macro situation and trying to figure out like what could happen to completely screw up our core modeling around the price of Bitcoin. And our core modeling is held firm, but with wider parameters than we usually like to use. So that means that it's a very loose model right now. We had a very tight model previously. This is on the trading side of our team. Like I said, I'm more of a venture capitalist. So really all that matters is Bitcoin. Now, if Bitcoin moves up, but dominance falls, that means you're going to see some really nice moves in some of the more high quality altcoins. And so, you know, from our perspective, those are very attractive right now. And then when it comes to making new investments, we do equity and we do tokens, and we've done, we do 1 or 2 a month at least, even in lean times like this when we're not sure what's going to happen to the market. And again, it's pretty easy formula. You find the right team with the right personality traits in the right location, and you have a very, very good chance that that team's going to do well. So we do that.
Perfect.
I will say one thing. When Paul was talking earlier about his ICO fund in 2017, I was doing ICOs privately because our fund hadn't launched yet, and I did some ICOs also through my old venture fund, Crunch Fund, including Orchard, and we couldn't do too many because we had to limit to the venture fund. But anyway, the funny thing is, I know a lot of venture capitalists that bought into a lot of those ICOs. Some of them, as you can imagine, have done terribly over time. Some of them have spiked and then gone down and up, down. But regardless, the funny thing is that these VCs have no idea how to sell these tokens. They sort of FOMO'd into these deals, and they're like, okay, we have the tokens, whatever the hell that means. And then literally years later, they're pinging me because I'm the guy they know in crypto, and they're like, hey, listen, we really need to sell, these tokens that we bought, and we don't know how to do that, particularly in a safe way. So when it really comes down to like what Paul's saying is actually makes sense, and we don't take smaller LPs, but I believe that that Pantera still does take even small LPs, hoping they'll become much larger. It is good to have somebody, if you're doing something beyond Bitcoin and Coinbase, like it's good to have somebody kind of helping you out, because it's hard to sell tokens when you don't even know what a token is.
Yeah, absolutely. And we're running out of time, guys. You've got about a minute and a few seconds left. But on that, is there anything that you'd like to add, Paul, and then maybe Simon, on where your heads are currently at in terms of what you're focusing on?
Yeah, I'll be quick. I mean, just on a high level, areas that we're looking at right now, we're looking at a lot of decentralized finance. So anything that is providing market infrastructure to get in and out of different currencies, or maybe even certain types of decentralized stable coins, things like that. We're obviously interested in payments. We're in the digital world, and in this market, I think payments is continuing to be very, very popular, especially using cryptocurrencies. And then I think we're continuing to look at consumer applications that provide a portal into different protocols. So think of it as sort of like maybe like a Robinhood for your DeFi protocols or things like that. So those are examples of things that we're looking at.
Awesome. Thank you. Simon, anything really quickly you want to point to, something you're interested in?
I think now with more and more institutional investors coming into the space, they're asking for the products they know from the traditional asset classes. So we guess that structured products on crypto underlyings would be an absolute burner in the next couple of years.
Awesome. Great stuff. Meltem, Paul, Simon, Michael, thank you so much for joining us today. We really appreciate it. We hope you'll stick with us and watch the rest of the program. I'm going to hand over now to our wonderful hosts, Anna and Gleb, for the rest of the program. Thank you so much, guys.
Thank you.